Hello, good afternoon, good morning. Welcome to 4IP Council's webinar, The Value of Intangible Assets. My name is Axel Frazzini. I'm the Managing Director of 4IP Council and will be your host today, alongside Dana Colaroli, the Executive Director of the Licensing Executive Society International, LESI, or LESI. Moving to slide 2. As you may know, 4IP Council is a not-for-profit research council developing high-quality academic insight on topics related to intellectual property and innovation. Today's webinar is the second in a series with LESI and has been marketed with the European IP Help Desk, who I would like to thank for their support. 4IP Council offers an extensive body of detailed research addressing current intellectual property and innovation themes. We also conduct education activities, including the creation of resources to encourage innovative SMEs to grow their businesses using IP. Among these resources, you will find interactive graphics complementing topics our presenter will cover today. Visit our website for a range of free materials. The slides and a recording for this webinar will be made available on our website tomorrow. If you have questions for the speakers, please post them in the Q&A area on your screen, not the chat, but please use the Q&A. Without further delay, Dana, the floor is yours.
Well, thanks, Axel. Good morning, good afternoon. I think good evening for some. Axel, I'm excited to join you and 4IPC to talk about the second in a series of publications that LESI put together and released last May. So we'll talk a little bit about the publications. Let me first talk a little bit about LESI. I'm the Executive Director of the Licensing Executive Society International. I'm Dana Colaroli. I've had a career in both government and private sector, working a lot on intellectual property issues, and joined LESI about a year ago. My joke is always that's pre-COVID, which is, I don't even remember what pre-COVID was like. But we've had a great year of making the organization a bit more virtual, including today's session. So who is LESI? LESI, it's an umbrella organization of about 33 national and regional organizations around the world, representing licensing executives, from companies to firms, to valuation experts, as you see here today, a number of the service industry providers, all who are focused on making intellectual property work in the marketplace. And there's lots of parts of that, and again, we'll talk about one of those parts today. LESI, similar to 4IPC, has a mission of providing education, but we're also a global platform for networking and creating relationships that help to make these types of deals work. We also feel it's important for us and others to play a leadership role on helping to form the best policy to enable licensing and to really value the underlying IP, because that's what's going to fuel the next inventions to serve our very critical needs. Medical, certainly part of them, and productivity as well. We maintain an international and diverse board from various different parts of the world, certainly focus on gender diversity as well. And we host a number of meetings, most importantly of which is our annual meeting. This year it'll be virtual, but please make sure you save the date for that. It'll be next May. And I think we're all a little tired of just Zoom webinars. We're going to try to make this session and hopefully our annual meeting a bit more engaging. So as I said, this is the second in a series of publications. We did a publication on managing your IP rights. This one today is focused on IP valuation. We'll have a third one, again, partnering with 4IPC on the licensing as well, so the basics of licensing. These publications are written specifically for the SME audience, but really they can be useful, and I believe are useful for all who are seeking to both manage and value their rights and get them into the marketplace effectively. These 3 briefings were written by LES members. So we've got a number of folks today, and I'll introduce our primary speaker, who is Andre Gorius, who's going to lead us through the basic highlights. And then we're going to try to engage you, Andre, in some conversation and try to make the publication come alive a bit more. Also with us today is Veronique Bloom, as well, who is one of the primary authors, and Danny Doman, who is one of the folks on the organizing committee for all 3 of the publications. So, Andre, you'll get petitioned by all 3 of us at the end of your session. So with that, I'm going to turn it over to Andre and have a good conversation. Andre is a 30-year veteran of Solvay Group in France and Italy. He specializes in valuation of intangible assets in the context of technology transfers, mergers and acquisitions, transfer pricing, and litigations, among other areas. Throughout his career, he's leveraged his scientific and technology background to effectively assess the value of these underlying assets. He also serves right now as the chair of our LESI valuation committee, and he's going to tell you a bit more about that too. So with that, Andre, I'm going to turn it over to you.
Thanks, Dana. So hello, everybody. Morning, afternoon, good day, evening to everybody. So we're going to talk about IP valuation, but I'd like to take one step back. Economy as a whole. When you want to build a business, what do? You need some money. You borrow it from your grandmother, from your friends, from banks, from shareholders. At the end, the only real reason why they would give you this money to build a business is because they trust you. Trust is intangible. So I think one good definition of economy is that whatever we do, a good part of economy is intangible. So here is a schematic of the Standard & Poor's 500 companies, as you can see, 75 to 2018. The blue part of these diagrams is the intangible assets you can find in balance sheets. Well, the trend is obvious. The more you go into present days and most probably into the future, intangible assets are a majority. What does that mean? I think that means that basically all our economy today is based on knowledge and on knowledge-based assets. So IP is one of them, but I think one thing to remember is that everything is really based today on knowledge and the transfer of knowledge and the information flows between all these people would say capitals or assets. So next. Thank you. So the question is, why do we focus on intangible IP assets, intangible or IP assets? As you can see, as I just said, there is a lot of value, intangible value in enterprises. So in some way, generally not in the balance sheets, but intangible assets are part of the company value. If you remove all the people who are knowledgeable in company today, there's not very much left. So there is an increasing trend, as I said, of intangible value compared to total value of companies. There's a recognized need today to increase the market actors' confidence in intangible value. Once again, when I invest my money into something, I'd rather have a good idea of what its intangible value is, be it measured in dollars or euro or yen or whatever, or just in trust I can put in the company. And finally, a very important thing is that we're talking about IP, one asset which is called IP. But IP asset doesn't mean anything if you're not able to market the product, if you're not able to discuss with your customers, have the good customer relationships, and so on. And you don't have the right people to create services or products from this IP. So basically, this is called complementarity of assets. Assets are complementary, and you cannot isolate one asset among all the others. So about IP assets. Well, they're intangible. I've said it many times already. their interaction with other ones, be they tangible or intangible. Once again, intangible, you have customer relationships and all that stuff, you have the knowledge of the people, but you also need, of course, some capital, some plans to produce your goods, and you need a supply chain and so on. All this is more tangible. It can be protected by rights, like patents. It can also be protected by secrets. And that's a big trend today to work on trade or business secrets and try to have the right protection around these. There are many things going on that right now. So then, what do I do with my IP asset? It's definitely a forward-looking thing. I have something today. The question is, what am I going to be able to do with it in the future? So what is the usage that these IP assets are going to allow? How and why are they bearing a value now, or are they going to bear a value later? That's a critical issue, and as you would see in the few discussions we have about methods, this implies naturally a lot of uncertainties. Okay, let's live with uncertainty. Next. So now, why value intangibles? Because economic value is needed for a wide spectrum of usages. Axel has just shown a few on his slides before, but basically we have grouped them. I grouped them in four basic types. Management-oriented. If I want to invest my R&D costs in one project or another, or even invest in R&D in spite of as compared to investing into a new plant of an existing product, it is a decision to be made. And to make decisions, you need qualitative and quantitative, let's say, decision-making processes and indicators. Value is one of them. Then you have a strategic decision-making as a whole. Do I build my company around R&D? Do I build it around licensing? Do I build it around only production and milk the cow, as some people say? That's strategic decisions that you cannot take if you don't have the right indicators. KPIs is one type of them. And again, numbers, value, and euros or dollars or yen or whatever is a good indicator in this case. They can be transfer oriented, so that's very clearly when you transfer assets or just knowledge from one part of the company elsewhere. Intra-group, you talk about transfer pricing when one subsidiary is using the technology of another one. Then you can do licensing, sale or purchase of technologies, of trademarks and so on. And you get involved in open innovation and R&D partnerships and so on. So transfer orientation means basically you have flow of information that goes from one party to the other, and you try to manage it. Here again, numbers are going to be useful to decide what to do, how to do it, and how much it's worth. Conflict-oriented, I'm not going to enter much into the detail. We're very clear about fighting against people counterfeiting our patents and so on. So evaluation of the damages in any conflict-oriented discussion, like whatever lawsuits going on. And finally, finance and accounting. Whenever you do a merge or an acquisition, you have the exercise called purchase price allocation. In this purchase price allocation, you're supposed to say, well, the company I bought had that much of tangible assets, buildings, plants, whatever these are, equipment and so on. And then you're supposed to allocate what is left. What is left is generally allocated between the goodwill, which is basically the box at which we don't know what to put, but that's the difference between whatever we have paid for the company and and the part that we can justify by allocating the other values. And one important asset is generally the customer relationship. This is very, very often identified as an asset, valued. And then you have IP or more generally technologies, which are also part of this game. So IP assets can be generally part of these purchase price allocation exercises, where it's never easy, but you generally have to do it. And then of course you can. I didn't say next, Dana. And the last one is just to say you might go to your bank and say, it's because I have a nice IP value, which is 10 million, that you're going to lend me 5 million. Next. So what has to be clear about intangible valuation and moreover IP valuation, we have strengths and we have weaknesses. It's an opinion. When I give you the value of a patent or a technology, it's nothing more than an opinion. It's an educated opinion, but please remember it's nothing more than an opinion. So what are the ways to go to this opinion? Of course, you start with the technology, the qualitative strengths, the qualitative strength of the protection of the patents we have. You're probably most all familiar with that. But then there are a lot of intangible things that are coming in. The context, at what technology readiness level are we? What are the competencies we have? What is the protection we have? How is the competition behaving? What is the entry barrier and all that stuff on the left-hand side. Then on the right-hand side of this diagram, you have to interpret the technology and the context in which the valuation is made. Believe it or not, in different contexts, the same technology with the same qualitative features can have a different value. Because, first of all, it's at a given point in time. What happens tomorrow? I don't know. So if nobody wants my product, my technology might be very nice, but it's worth zero. It's under given circumstances, of course, same thing. If there is a war or whatever, things will change. I take extreme cases, of course, but we have more subtle things that change every day. That's life. And in many ways, it's just this opinion is similar to a legal opinion, but more focused on economic terms and I would say technology specificities. And on the right and on the left, hand side on the bottom, the reality is that the competence and the talent of the evaluator are key. Because while valuing an IP asset, it's not about numbers. It's not about numbers. It's not about writing a nice Excel spreadsheet and computing the right numbers. It's about understanding what you do, why you do it, and how it is adequate to what the objective of the valuation is. So once again, the economic value of an IP is an opinion. It depends on a lot of things, and so it is not very common for people who work in accounting. There is a lot of uncertainty. I will show some examples later. We have to live with uncertainty. That's the rule. If you remember only one thing of my speech, please remember that. Next. So once you have done all this complicated analysis, and when you have gone through all that stuff, you have understood the thing, and once again, you don't do it in an office. You do it with many people, you organize meetings, you discuss with people, you go visit sites. That's the way I work. I never value an IP if I don't grasp the reality of what is on the shop floor, what do people think, how competent are the people, and so on. Then, and only then you go to the technicalities and use methods. So you can in this table, I've tried to summarize all the methods that are generally used today. I'm not saying these are all okay, but these are the methods that exist. You, from the left to the right, you go from the cost type of approach to more revenue approaches. So I will detail each of them going from the left. So the cost approach, the idea of the cost approach is, well, what would it cost to build the same thing today if I had to? The same thing, same technology, same patent, whatever. The key issue about that is clearly, first of all, it's not easy to do that, right? You have to ask a lot of questions. It's not just counting whatever has been spent in the past. Well, the past is the past. Present is the present. Today, maybe you should do something else. So it's not easy. Second thing is the key issue of that is that, of course, cost is not value. Everybody has in mind the story of very, very simple inventions which have been then marketed for billions. Cost is not value, and it's just this is it. This is the key issue with this method, and I will say later when you use it. The application domains, as it's clear, is, well, you do that if you have nothing else to do. If you're not able to do anything else, all the other methods. or which is generally true in early stage technologies, when you know nothing about what the market is really going to be. You have grasp about what you can do with your technology and who you can license it and so on, but you don't know what you're really going to do with it when it's early stage technology. This is a more adapted method. In practice, when I say in practice, this is my personal opinion. I wrote something more smooth, but I've never seen it as a primary approach. It has always been used as a comparable approach, saying, well, if I get this number and with this method I get that number, they're not too far away, then it's okay. Second approach is the market approach. That is very interesting. The idea is to say there have been a lot of transactions on the market selling or buying my IP. Buying IP, and I try to find transactions which are, let's say, comparable to mine. Of course, your IP is unique, so that's not easy, but there are good methods today, and which work rather well for patents and patent portfolios. The idea is that you look at your patent or the portfolio, and you look at the features, the intrinsic features of it. Generally, the 18 to 20 dimensions that you look. The classical things, geographical coverage, legal issues, and so on, citations when the patent is already in an advanced stage, and so on. So this works pretty well, and I've done very often this kind of valuation, saying this patent has these 18 characteristics. I have many transactions which have characteristics in the same area, so the value could be in this area. Next two types of approaches are the most used. The most used is the revenue approach. Revenue approach is basically, what is the idea? Is I have something, it will generate revenues in the future, and I say the value of the thing today is what the revenues of the future will look like today. Basically, that's the idea. So the technicalities are discounted cash flows, where you discount revenues, profitability, whatever good indicator you have. The key issues are generally there: the royalty rate, which is benchmarked, as you probably know, and the discount rate, which is never a detail, which takes into account all the risks and all the uncertainties, and the uncertainties, as you understood, is the rule. The application domain is very broad, so there's no real limitation about that. As soon as you know, have a good idea of what you're going to do with your thing, then you can value it. It is very often used, and the discount rate is never a detail. Another different approach, but complementary concerning the revenues, is to use the real options. Real options just means that there are financial options. You can buy the option to buy or sell a share on the market, and that costs you something. The idea is exactly the same. Instead of buying a financial option, you think of the value of what is the option of deciding to go into a project or not, or to choose route A compared to route B, and so on. So basically, it's based on decision trees and discounted cash flows. It is very well adapted to projects, R&D projects, and strategic projects. And my experience is that the values that we get out of that are not the critical point. My experience is that this is the way. Doing a real options approach is the way to put people together in a room and discuss about the real issues around their projects. And at the end, people are more aware of where the projects are, where the problems are, and how to cope with them, and so they're more efficient. So once again, 3 big families of approaches, 4 different types. Revenue approach being the most often used. Next. So let's not stay in theory. This is the kind of example, which is a real example, which of course I changed all the numbers, but the idea is that when you do the evaluation of an IP, you have many parameters. Here I have listed 1, 2, 3, 4, 5, 6 parameters, which are the net sales, of course, the year-on-year growth rate, the royalty rate, the duration, the time life of the asset, the lifetime, of the asset, the WACC, which is basically the discount rate, or has something that is used for the discount rate, and the technology risk premium, which is also used for the discount rate. All these things, well, they can vary. They can vary because we know that things can vary. The sales can vary plus or minus 20%, which I think is already very conservative when you know that you don't know the future. You're supposed to predict the value of the sales in 2 years from now. You might not know what you're going to sell next quarter. So there are many uncertainties. So you plug into all these parameters your uncertainties and try to get education guesses. As you can see, there are big variations. The year-on-year growth rate varies from 1 to 10%. Okay. So then you do what is so-called Monte Carlo simulation. Nothing more than taking random parameters in all these ranges, making a lot of scenario. Here I just made 5,000, but generally it's 10 to 15,000, whatever. It's not very long. On Excel, it takes you a few minutes once you've programmed it, but the result is very interesting. So look at the diagram here on the right-hand side. This license, if it's €1 million, I could say that with 90% probability, the value is between 18 and 53, which is not the kind of thing accountants like, but that's reality. That's life. You can also say that probably the most probable value is around 30, where the peak is here. Okay, this diagram is just a kind of a Pareto type of diagram. So this is very useful when you negotiate. When you negotiate and you're the seller, well, you'd like to sell it for 53, for 53. And the other one would like to buy it for 18. But you all know that if one is buying it for 18, he's probably most probably wrong. If I try to sell it for 100, I'm most probably wrong too. So this is very good basis for negotiation. So there are two things in this slide. First of all, let's not forget that there is uncertainty. Let's be rigorous about uncertainty and see what the numbers tell us. And then when the numbers have told us something, like I just said, then we use it as to negotiate, to discuss. Next. And then how IP valuations helps to build a strategy. That is a very nice example of a startup I was working for not too long ago. Our question was, how much is the value of the IP? And when we learned about the company, we saw it's new and competitive technology. They had, let's say, seen from today, a realistic business plan. They had the sales were already beginning very slowly, but they were beginning. So there was some kind of a market reality behind that. As far as IP was concerned, well, they had their internal knowledge and the know-how dependent only on a few critical persons. So my guess there was, well, they should manage well these persons. If one of them has an issue, COVID or whatever, they have an issue. But that's one kind of that's something that you have to integrate in the value of the IP. To this risk of losing one important person who has all the knowledge. They had very few patents. In reality, they had acquired the patents when they acquired the technology and they did nothing with them except maintenance. Basically, that's the only thing they did. There is no real management of the IP assets. There's no IP strategy. And there was no real entry barrier. Basically, after all these years of development, somebody could come and develop the same thing, not a too difficult mode. I mean, you understand what that means. There were many things which were not, let's say, optimal in that story. So the question for us was, how can we help them? So what we did is build the first model is the as is. This is what the data you gave me. This is the way you manage your IP. This is what I get from the numbers. And then a second model in which you say, well, we work from today and we try to extend the protection of your patents and so on, and of your technology by patents. And I mean, technically speaking, nobody needs to. There's no difficulty in understanding that it's better to extend the patent protection than not. The question which was raised, and the CEOs generally like numbers much more than philosophy. They wanted numbers, so we get them the numbers. Next. So this is what we did. Again, the business plan is absolutely false, but it started with 100 the first year, but the growth rates are the ones that were really in the business plan. So they had to forecast a rather nice growth, and as far as I know, it's really working more or less that way today. So what we did is that we computed. This is the result of a few Excel spreadsheets. In which you have the result is the variables I just showed here is the royalty rate. You know that we live in a world where people have 5 fingers. You are not going to be astonished that the most common royalty rate around the world is 5%. So I choose 5, 4, 4.5, and 5.5. This is not the reality. This is not what we use in the real case, but this is my example. And the projection time is the one given by the patents. They had a protection time around 3 years from now. Then you just can compute and what happens if you do 10, 15 years with many other inputs from the company. But what is striking here is that if you look at the center column, you can multiply easily. You can multiply by 5 or by 10 the value of your asset if you have a real IP protection and a real IP strategy. The key message is this one. Is that it's clear that it's better to have an IP strategy. I'm able to convince a CEO while showing him numbers and examples, and this was the one which was really striking. So that is the way that I would say IP valuation can help in strategic decision making. It's not all about numbers. You have already understood that. It's about the way you decide to put your parameters into the numbers and then get the numbers, and it's about after the way you interpret what you have just done, because this is key. I was trained in physics, and my best professor who was a Nobel Prize told us physics begins when the computations are over. He was right. I'm sure about that. So next. Thank you. So this was about what we tried to evidence. I think the key messages you get them from the slides I just showed. Remember that uncertainty is the rule. Having good numbers is important. It's not the alpha and the omega. It's important to do the calculations. It's important to understand what you do. And if you purchase an IP valuation from somebody like me, you have to understand what the guy is doing, and you have to be able to make judgments about what the guy is doing. And that's why we wrote this primer, this document that Dana evidenced at the beginning of the presentation, to give people an idea of what all these things are really, and where to look at, where not to, let's say, forget about looking at what the evaluator is going to do. That is the important thing that we wanted to show in this document. Okay, this is all part of a regular type of meetings that we do. It's the IP evaluation committee of the LESI at the worldwide level. Today, this committee is composed of 8 people around the world. All continents are there. Each of them is himself the president of a local IP evaluation committee. So there's one in France and Italy and Germany, in the US, very soon in China. We have built 3 new ones recently. So the IP evaluation committees are now growing locally, and we try to at this level, of the international level, to put everything together and to help people exchange between all these different committees. So webinar interesting in the UK is then shown elsewhere when it's useful. And by the way, there will be a very good webinar by LES France in French, I think next week, and we are going then to put it on the international level very soon after that, and in a few weeks after that, and it will be about real options. Okay, so this is basically what we try to do there. Our roadmap is, as you can see, communication, as I just said. Share and educate. We try to share methods, toolboxes, ideas, whatever, databases, literature. And we have one project underway, which is to create and manage a worldwide recognized IPv certificate to make sure that this profession gets the right level of standards. I think that's it. Thank you.
Great. Andre, thank you so much. I see a few questions coming in on the chat, and appreciated the additional information about the work that you've been doing at LESI and the committee. Andre, let me start off the questions, and I'm going to ask Veronique and Danny to turn their videos on as well, and we'll all come in and ask some questions for you. And I'll kick it off. I mean, you do talk about this uncertainty, right? And that's really the thing, isn't it? I mean, it's it's connecting a more certain value so that you can communicate, whether externally to people that you're going to license with, or inside your company. So let me start off with the basic question. How do you convince your CEO to invest in the IP? It's not, as you said, it's intangible, literally intangible. How do you convince them that they must invest in IP?
I will let Veronique say a word after that, but to me, there are only three ways. The first one is example. The second one is example. The third one is example. This is how it works. I've only been able to show philosophy that people read a lot of things. People are able to understand their concepts very easily at that level. Try to find examples in there as close as possible as their own business. This is what worked in my case. This is my experience.
Ronnie?
Do you want to add something?
Yes, I'm not sure I have something to add to this. How do you convince your CEO? Yes, by illustrating, showing that similar decisions have been made, in other contexts, but similar settings. I think, Andre's answer was the best summary, I think, to that first question.
No, that's good. I mean, I'll ask it slightly different way. One of our questions that came in placed it this way. Given that IP assets are not visible on the balance sheet, where can you find their assessed value?
Veronique, you can answer?
Okay, I can answer to some of this. Well, if they're not on the balance sheet, there may be no communication about it, then that is an issue, of course. For this reason, some of our authorities are now giving some time for thinking about the extra financial reporting. So you have initiatives like integrated reporting, or we have a directive in Europe, for example, that tackles those issues, and IP is one of them. So it's rather in the extra financial information that you can find information about this IP that is not recognized. The trouble with the IP which is not on the balance sheet relates to how it was acquired and how it was developed. For example, a patent, if it is internally generated, then you will have no recognition on the balance sheet. However, if you acquire it, if it's object of a transaction, then the price of the transaction will allow a recognition on the balance sheet. So you may think about the transaction as a way to make your patent or your IP visible.
And just to complete, I will just say once again, kind of a joke, but reality is that when you assess your IP, you're not eager to tell the whole world what it's worth, and so it's a trade secret. It can be a trade secret, which has itself an intrinsic value.
I also was interested, Andre, in your reference to customer relationships as well as pulling that into it. I thought that's fascinating because that certainly is part of what you're looking to license as well. Not just that underlying technology, but that customer relationship. And there's real value there. Danny, you helped to oversee the development of all three of these publications. And they're really different pieces to licensing effectively. What do you think about the presentation? What questions do you have for Veronica and Andre?
I just want to say thank you very much for Andre and Veronica and the rest of the team. I think they did an excellent job. And I think there's real value in the publication. And then again, thank you very much for this talk, Andre. But the main theme throughout the talk and in the publication is uncertainty. The uncertainty in the valuation of IP is essentially the rule. And we see the market approach, the discounted revenue approach, as well as the real option valuation approaches. So I think for business, that is a real problem. And how to get over this uncertainty and to trust the data and the information that one gets out of these valuations. Andre, so how would you help a business deal with those uncertainties? And I see on the chat there's a question from Pascal, which is close to that and which we'll take after you've answered this one.
Well, the first thing is to understand the uncertainties, as I tried to show before. Try to be as rigorous as possible and not invent anything that pleases the boss, but invent something that is the reality of what you understand. Then it's a difficult exercise at the end. When it comes to the most used method, is the discounted cash flow methods. There is no real way of assessing the discount rate. You can compare scenarios, you can compare different things. So it's more an art today than a science, these things. And this is where I think there is still research to be done. Sorry about my answer, but assessing the uncertainties is, first of all, understanding them, making sure all of them have been, let's say, listed. And then that's where it comes to all these ranges of things and say, this is the best we can do with what you told us. One obvious uncertainty is that I don't know the future, and I suppose you don't either. That's one of the biggest in reality. Then there is the uncertainty of understanding well the business and so on. You can reduce some of these when you talk about costs, when you talk about development, technology readiness level, and so on. You can reduce these by putting money on the table and working with R&D. But basically, as I said, it is most difficult. It is the most important thing, and that's where I come to the real option story, is that the most important thing is that you have to be aware of these uncertainties. You absolutely have to be aware of them. When an accountant whose job it is to ask you the number with two decimals, two numbers after the decimal, it has sense. When he asks you the number like this, you have to tell him, I don't know. Reality is, I don't know. But this is, I can tell you, is between 1 and 2.7. That's it.
And then, as you said, point to lots of examples throughout, right? Example.
Yes, basically.
And also, I think,
good, Danny.
I just want to add also a good knowledge of the industry and the circumstances of the industry. That would be crucial because that, to some extent, limits some of those uncertainties.
Sure.
But I think that's then also Pascal's question is whether there's been any standards that's under development to assess IP value. And I think that comes back to the uncertainty and to counter that to some extent.
Veronique, you want to comment on that?
Yes, about standards. I don't know which standards Pascal is thinking of. If he's thinking of accounting standards, then we have the intangible standards like IS 38, but there's also the valuation standard by IVSC. You have a dedicated standard to the valuation of intangible. I think it's IVS 120. And by the way, I just checked, they had the podcast today on accounting for internally generated intangibles. So you may want to give a look to this one. Otherwise, we have ISO standards for brands. There is one ISO for financial evaluation and an ISO for qualitative evaluation of brands, but we don't have similar standards for patents or other intangible or other IPs. So there's still work to be developed on the topic.
There's one standard for patents, which is the DIN German standard or norm, which is very useful. All these standards have one thing in common, that they're very, very good checklists to not to forget anything in what you are discussing. For example, what Danny just said. These are very good checklists, and at the end, it comes down to what am I going to do with all that? What numbers do I put in my Excel spreadsheet? And that's where, well, I'm not going to comment again. That's where the difficulty lies at the end. But these are very, very, very good. If you enter in this world, it's very good to read. They all read these standards. Read all these standards because it tells you what not to forget.
And maybe we can also point to the BEPS whenever we deal with transfer pricing issues. That could be
about accounting standard. This is really a mess. Make it simple. Seen from somebody who's not an economist, it's really. I'm not sure that it makes any sense to want to put 100.00 million and a lot of zeros behind that in a balance sheet. I'm not sure it makes a lot of sense. I think integrated reporting has probably much more to do with these things, qualitatively explaining what the assets are, than real accounting. Let's say for these things, which will vary tomorrow morning. So.
Yes. The difference is that integrated reporting standard or guidelines, well, don't exist so far. You have guidelines about what you should be reporting about, but not how you should be reporting about. So right now at the level of the European Commission, again, there is an initiative about standardizing or defining the standard for these extra financial reporting. So this will come up shortly.
Yeah, this will be the right thing to look at. Okay.
Another question, Andre, we've gotten is, what trust can you put into patent software where a patent value comes with the bibliographic data?
You really want me to answer that? You really want me to answer that after all I've said?
I mean, I think I know what the answer is, but
the trust is it gives you a number. That's all.
Yeah.
Oh, sorry. I mean, of course, it's very, very difficult. I looked at what the EPU was on. They did a very good job, EPU, no doubt. I don't remember what the name of this software is, but at the end, today at least, I think even artificial intelligence is not going to be able to do that better than we do today. One day it might happen, but today we still need, let's say, to think out of the box and take into account all these things that are peripheral, and understanding the business in which you are, understanding the company, understanding the management style changes the value of the IP. I mean, today the software, I'm not sure it takes into account these inputs. It's not a big deal. I mean, use it. If you want a number, use it, but then come to a specialist and see if your number has some meaning.
Yeah. Yeah, what I hear from you is it may be a starting point, but frankly, if it's your rights, you're the best advocate for it. You have the best eyes to determine and to point to those things that really are value. And it's a matter of building a case on what that value is.
Give you hints. Okay, can give you hints, but it will not do better. What they do, this software generally, they do two things. The first one I believe in is the one which is really trying to understand the features, not the technical, the features of the patent, and then put it in an hyperspace and see, I have so many, 18 dimensions, as I said before, and I have so many transactions, 10 transactions which look alike and which have all the value between 100 and 120. Well, this number is not a bad number in this case. The second kind of thing they do, they take your sales, they multiply it by a royalty rate, which you can determine, or they determine it themselves, and they discount it with 10%. Generally, that's what they do. Or 15% if it's not an advanced technology. That's what they do.
Another question that I saw Stephen Potter is online, asked a question that maybe I can start actually answering. I know that LES tried some time ago to gather together data on licensing deals. Did this exercise finish out? And if so, are there any published results or databases? Well, there certainly are the royalty rate surveys that USA Canada had started. LESI has been trying to work with them to make them a bit more global. I know that a high-tech survey and a life sciences survey are both in the works. I think COVID slowed down getting those out, but I would look for more activity on that hopefully next year. And again, I think we would, from LESI, we would try to make that much more global and really be a little more insightful. The larger pool of companies, frankly, that respond to these things are the most, give it the most value. And frankly, it can increase the certainty, right? Andre, it's another thing that you could point to say, look, there is value here. There's consistency and predictability in the industry. In addition to those particular products. I'm a U.S. practitioner. I'm very aware that the U.S. Environment is a very litigious area. So I think that certainly often negatively impacts the value in some of the rights that we're talking about here. So, you know, I'm a believer that those types of surveys are useful. Let's see, what other questions we do? Andre, here's a question for you. We had one participant asked if there's an IP valuation committee presence in Africa, especially Nigeria. Donnie, you may be able to tell us about South Africa. I don't know about Nigeria. Not yet.
Unfortunately, I don't think there's any other LESI society in Africa, except for South Africa. We've got a very active valuations committee in South Africa, and we do run annual courses on valuation. So if the participant from Nigeria wants to contact us, some of them are online, so please feel free to do that. I know Europe might be slightly closer geographically to Nigeria, but there are lots of options then in Europe as well.
I could suggest very easily two things. The one is to contact us in the IP Valuation Committee, because that's a job. When there is no local IP Valuation Committee and somebody wants either to participate in one or to create one, this is open. So come to us, and we either, if there is need, if there is a way to do something, let's create it together in Nigeria. One, if not, there are some examples of people in Belgium speaking the same language as people in France, and who joined the LES France. It's our job to help people either enter the right one. Or create one when there's a real need. Why not create one? I'm very, very happy with the idea of creating one in maybe Algeria, Morocco, and whatever countries which have the same type of language, or even the person from Algeria wants to join the French one. I will do my best. No, I make sure that he can join. By the way, the president of the IP Valuation Committee in France is called Véronique Blum, and she will be more than happy to.
Yeah, I was wondering how you were going to convince me.
I think we have time for a couple more questions. I saw one, and maybe this is a question to both Veronique and you, Andre, whether there's any good academic papers that address this issue that either you've authored or that you've read recently. Anything you could point to?
Oh, there's plenty of academic papers. So I think maybe we should have a discussion on what type of paper and how we can refine this. Of course, we have produced some of those, but we also have in the audience people like Bruno van Potelberg, who has produced plenty. So there is a lot, whether it deals with only valuation, with valuation methods, with the objects of valuation, with the process of litigation and the value within this process of litigation. So there is a lot of literature on the topic. Yeah.
There's one thing we can help with is that we have begun. This is still ongoing to build a toolbox in which at least we put some more professional references. There are a few very good documents which are very interesting to read if you enter that field, and there is also a list of some publications which can be, let's say, focused on instead of looking at everything, more focused. So if you once again, if you need this toolbox can be an input for somebody who wants to enter and look at these papers.
Excellent. With that, I think we're going to end. I saw a lot of other questions that came into the Q&A. We can certainly look at those afterwards and maybe provide some answers on the for IPC website afterwards. But I want to say thank you to both of you. both for the article and for this great discussion. Danny, thanks for jumping in and helping me question our authors. And with that, I'm going to turn it back to Axel to close us out. Thanks.
Thank you, Diana. Thank you very much also to Andre, Veronique, Danny, for the great presentation and the lively discussion. But on top of that, I would like to thank all the dear participants for all the questions that we have received. So unfortunately, from a timing perspective, we could not answer all the questions, but it may give some ideas for future webinars. And as explained before this presentation, a recording will be made available on the 4IP Council website tomorrow. Later today, you will receive an email inviting you to complete a only 1 minute survey about this webinar. We will be very grateful for your feedback. If we go on the next slide, you will see that we have the date of the next joint webinar with LESI and 4IP, which will be on November the 17th. And the name of the speakers will be provided on next Monday. So you should receive an email with all the information. Finally, please feel free to visit the LESI website or the 4IP Council website for all IP-related information. Thank you very much for your time, and thank you for listening. Talk to you soon.
Bye-bye.